Happy Friday, Brian Manning here with your weekly update. But first of all, Happy New Year. Hope everybody had an amazing holiday and just want to wish a Happy New Year to everybody. So, really, the big news this week happened yesterday and today. So, yesterday we had the ADP report. So, the first week of every month we get employment reports. Typically, in the first Wednesday, we get ADP. In the first Friday, we get BLS. But because it was a holiday week in the beginning of this week, ADP was pushed back and we got the ADP report yesterday. So, expectations for the month of December was that 130,000 new jobs would be created. We got 164,000 new jobs created, so slightly better than expected, but it wasn't a huge shock. What was good to see was that you saw wages decline, which meant that wage pressure inflation was declining as well. So it's another inflationary item the Federal Reserve looks at. So it's good to see continued reductions in inflation there. We also got the Fed minutes. This is from their meeting on December 13th. It was really good to see the Fed minutes. First, it showed they seem kind of convinced for the first time that inflation is relatively under control. So that was great to see. They also acknowledged that there's definitely risk in staying restrictive for too long or being overly restrictive. That's going to play into the thoughts of rate hikes coming up this year. Not sure when it's going to happen, but it's good to see the Fed minutes there. We also got apartment list. This is for the month of December. It shows that rents were down 0.8% on a month-over-month basis. This is important because the inflation reports that we look at, about 43% of those reports are based on shelter costs. So with shelter costs going down, it will catch up in the report. It's going to show continual easing of inflation. Then today, first Friday of the month, we get the BLS report. That stands for the Bureau of Labor Statistics. At first, it was kind of a shocker. There was an expectation of like 180,000 jobs to be created, and we actually got 216,000 new jobs created. But the prior 2 months were revised by 71,000 jobs lower. So at first it was a little bit of shock for the report just because it seemed like better higher than expected, but it looks like the market started to digest the revisions. And if you go back to a year worth of reports, every single time an employment report has been issued, either 2 or 3 times going forward, those numbers have been revised lower and lower and lower. So we looked at an employment report that we got, the last 2 months, and those jobs look pretty decent, but you start reducing them by 71,000, the jobs don't look as good as they did before. So their employment report looked really good in the beginning, but I would say it's not as good as it seems on the surface when you look back at the reductions, and on a monthly basis, you continue to see revised numbers coming through. I'm around all weekend. If you have any questions, let me know. If you want to learn how we're closing purchase transactions in 12 days start to finish, give me a call. Happy Friday. Have a great day.